after having authorities, after having funds and investors for some founders, but not before thanking our sponsors today, besides OMV Petrom, Ocean, Caida, Retea, Crema de Matei, Moesis, To Print, To Cut, and Safety Coffee. I like that Mr. Bogdan Gurea Ivan talked about quantum computing, because I think it's a way that Europe can bridge this gap to the US and China. But I told you, I feel the need for some founders, because we cannot play this game without them. So this next panel is dedicated to them and how to achieve sustainable growth in this current environment. I also like the fact that the moderator of this panel is a founder. He is one of the 3 people who launched the most important invoicing software in Romania, and one that I can say that single-handedly pushed digitalization for SMEs in Romania. After a successful exit to Visma, he is now a lion at the local chapter of the Shark Tank TV show, Imperiul on ProTV. Ladies and gentlemen, Mircea Căpățână.
Vlad, what a great introduction. I got red, I blushed. Thank you so much. Hello everybody. I'm very happy and honored to be here with you. So today I'll be just the moderator, and usually I like to memorize everything, but our speakers today are so successful that you cannot memorize so much information. So the first one is future unicorn, Sergiu NEGUș, co-founder of Fintech OS. I put this from myself, the unicorn. He's an accomplished and forward-thinking entrepreneur, strategist, and thought leader known for his impactful contributions to the business landscape. With a keen understanding of market dynamics and a strategic vision, Sergiu has played a pivotal role in shaping the success of ventures across diverse industries. He is the co-founder of Fintech OS. Sergiu NEGUș again. He's also a teacher at BISM, where I'm a student, but I didn't get to meet you yet, Sergiu.
You missed the class.
I QL'd, I skipped, yes, because I was afraid of you. The next one is ex-banker and now a guru of Seedblink, Andrei DUDOIU, managing partner Seedblink, with also a very long description, because he's a great guy. Managing partner and president, board of directors at Seedblink, a tech-focused equity management and venture investment platform. After 20 years of banking, he's still alive and kicking. In 2018, he pivoted his career and entered the entrepreneurship world. He first co-founded Human Finance, a platform that developed education, digital tools for entrepreneurs, and aggregated an investment readiness rating for the early-stage innovative startups. 1 year later, in 2019, he had his partners made a spin-off and launched Seedblink. Yay! The first financing infrastructure for European innovation developed in CEE. Seedblink's mission is to simplify and grow equity ownership in Europe by making it easier for tech companies and their stakeholders to access, manage, and trade equity. Andrei, welcome, and congratulations for such a successful career.
Great speech.
I hope I'm pronouncing it well. Sinisa, RAKOVIC, founder and CEO of Hunch. Good-looking guy. It's first time, we're meeting for the first time. A seasoned leader and CEO at Hunch. Spearheads an AI-driven creative production and media distribution platform with a profound commitment to aiding brands in business expansion across social media. He brings a wealth of expertise to the panel. As a 3-time father, whoa, you should teach me a little there, and 3-time startup founder, he navigates the dynamic intersection of technology, creativity, and entrepreneurship with a unique perspective that promises valuable insights for the discussion. I already presented you, Hunch, Sinisa RAKOVIC. How you pronounce it?
Sinisa RAKOVIC, or Ziggy.
Ziggy, it's so much easier. Thank you.
Just as a note, that was generated by ChatGPT.
Really?
Yeah.
Okay, that's very cool. Actually, I made a small investment in Hunch through Seedblink, so I'm gonna have a little fun with this today. And of course, we need some e-commerce. Mihai PăTRAșcu, founder and CEO EvoMag, the only company able to compete with the giant, huh? And he's still, you're like David and Goliath. I think you can come. Don't be shy. A prominent Romanian entrepreneur founded EvoMag at the age of 22. Wow. Over 18 years, EvoMag has become a major player in Romania's e-commerce industry with revenues exceeding 36 million euros. Recently, the company secured a 2 million euro investment from Catalyst Romania. Congratulations, Marius and Alina, very good. In addition to EvoMag, he's a shareholder in watchshop.ro, the largest online watch store in Romania. His motto is work hard, play hard. Woohoo, he's the founder. Welcome guys, welcome all. So we already spent 10 minutes with the introduction of the speakers, but luckily we have a lot more time. We have 70 minutes left. So let's talk business. I have some questions with the organizers for you that I already sent, but I will ask you other questions because life is not fair. Things changed a lot when we received the investment from Catalyst. Thank you, Marius and Alina. Like a gazillion years ago, it was 2016. We got a valuation that made us very happy, and some years later, we had a successful exit. That also made us happy, and then I tried to start investing in startups, and I also, of course, used Seedblink. And then I got depressed, and I called Radu Georgescu, who is also founder in Seedblink. Yes, it's a small country, and everybody knows. In this village, everybody knows everybody. And I told Radu, who is also investor in SmartBill, what the hell happened, because all valuations are so high that I feel very poor. So they say, hey, look at these guys, they make 150K and they are worth like 10 million. So what the hell is going on here? Radu explained me something I didn't understand very well, because when you're poor, you don't get to understand. Let's talk a little about valuations. All of the four of you received some investments. At the current day, today, if you were to receive a new round, would it be at a higher valuation, a much higher valuation, or a smaller valuation? I would like an answer from all of you. Mihai, you're smiling, so it must be good in your case. So you start. Let's start in a positive.
This question was not in the list, no?
No. I said I'm cheating, so you have to, because you know. These are the questions people ask themselves in their head, so, yeah.
First of all, thank you for this opportunity to be here. For us, I think we don't think about evaluation, because in our 18 years old company and adventure, I think it's only a step. And most of the time we focus on how to grow the business. It's like entrepreneurial style. Okay, what are the issues, how to solve it? And I don't think about evaluation. And it's not a PR style or something, but we are happy with this partnership that we have now. And we don't focus on will be bigger or not, or what will be much more for us. This is our focus in this moment. Maybe in 5 years will be different, but now we are focusing on next step.
What's the plan, the short and medium plan? You, of course, want to grow the company. You are looking to make an exit, or?
Very honest, our partners have much more experience in open a lot of doors, and to maybe in 2 years, 3 years, 5 years to have a bigger evaluation and to raise much more money. This was our strategy, and because they understand the market, e-commerce market, that is not an easy market, it was for us another white ball, and we made a decision that because we had some evaluation that were bigger than that we received, but we think on long term. Our company is 18 years old company. I like what I do. I think I will be here another 5, 10, or 15 years. Why not? What is next? This is.
So in e-commerce companies, how do you evaluate companies? Can you give us some clues? Because many people that have e-commerce dream to receive investments. And I'm curious if you can give us some details. How do you value a company in this area?
I think you look on the growth. You look on what is the ceiling if you are in this market, because now I'm sure that it's a very, very good market for us and for our track record to grow. And I'm sure that in the next 2-3 years we will grow much faster with this partnership. But we look, I think, and I'm sure that they can say the same thing. They look on the growth, the potential, and the margin that you make.
Andrei, what can you say about how is Seedblink going compared to 2 years ago when you started? Effectively how the company goes, and also how is the feeling in the market about Seedblink? And because you are how is SmartBill for invoicing, it's how Seedblink is for investments. You're in the center of things, and I think you have very valuable insights to tell us about how things and how the market is going these years.
Yeah, so there are two questions, one about Seedblink and the other about the ecosystem and other startups. Seedblink is much more complex compared to 2 or 3 years ago, because we managed to develop the first product is the primaries, the companies that we are listing on a regular basis on the platform. The other, which is part of our license that we got 1 year ago, and we have been among the first 3 companies, first 3 platforms in Europe to get the license for the new regulation and the passport across Europe. We also have been able to open the secondary market for the companies listed on Seedblink. And the third, which is the newest one, is Nimity, which is part of our offering. It's for cap table and stock option plan management. This is a SaaS, so it's much more complex. The employees that we hire are a bit different as compared to 2 or 3 years ago. The management of the company is different, so it's a growth. It's more complexity. We are covering different markets. Nici asta. Se aude. We are covering different markets, different regions, there are different habits of investment. Talking about investors now, it was a long debate also before, and for sure also the private investors are following the trends with the institutional investors. They are more cautious, they are more picky. So the valuation for the companies is different, for sure. It's a different market. On the other hand, we saw that the best companies are receiving better valuation, maybe that because the pool of the companies the institutional investors are looking at is smaller, and then they have to invest in a smaller number of companies. Then the battle is higher for the champions. So we have seen during the summer Flowix, which is part of our companies in the portfolio, that was the largest Series A round globally for a SaaS, enterprise SaaS company. And the valuation was 120 million, if I remember correctly, for a Series A, and they raised 35 million euro. So it's more, it's a big difference between the, let's say, companies that are on average and the champions in terms of valuation. But yeah, the mood is different for sure for the investors.
About the Seedblink portfolio, so you already have like 100 companies that went
yeah.
How are they now? If you were to make an X-ray of all the startups that raised funds through Seedblink, how are they doing now?
On average, I think the one that failed, which is let's say it's someone expectation of the investor, or the mentality you invest in a portfolio, and some of the companies are failing. There are only a couple of them that we are pushing them to provide us with reports every quarter. And it's already a message. If they are not reacting, it's clear that something is going wrong there, or they are just, maybe some of them are very busy and not able to report, but this is not the case for most of them. I think 2 or 3 of them we know they are not. We're not closing the doors, but they are in a, let's say, in a mood. They are not growing the business, or they fired the employees and so on. The rest are surviving. I wouldn't say they are better than average, but we had some very good surprises from some companies that they made a pivot. I think it's the English word as well. Recently, it was publicly announced Siena, which formerly was Cardloop, that was actually they canceled the former. They had a different product before. They pivoted, and now they just announced a raise in US with a lead investor from US of almost €5 million. A company that was supposed not to live anymore, and our investors were able to find out the good news unexpectedly. So it's.
So because in this VC world and seed area, it's very natural for many companies to die. So I don't think the message should be received that it's not going well. That's why we are very curious how, if things would have been better, because now it's not a crisis. It's like everybody is not so sure. Would you think 2 years ago would have been better if the things wouldn't change, like everything was like 2021?
For most of the companies, I think if their product, there was a product market fit. So from this perspective, we assess them as such. There were the founders, the teams they are still working together with only a couple of exceptions. So which is another trigger for a company not going on. It's the chemistry or the team, how is the team working within a company. But the most important thing in this, if you are referring to the former times or the cycle of a company, is to correctly manage the cash, which the mentality two years ago was totally different. Because
maybe tell us more in detail about this, because you're a 20 years banker.
I try to erase my...
also entrepreneur VC.
I tried to erase my banker mentality because I was not able to finance any startup until I couldn't manage to erase my banker approach. But in this period, if everybody was aware that it is coming, and then for sure it was a different treatment or a different approach of the cash management, because nobody can guarantee that you have access to a new round in good terms for you and your investors in the next 1.5 years or 2 years, when it's a cycle for getting a new round. So yeah, how you manage the cash and how you operationally you are succeeding to generate or to show profitability in the next year. Now it's a trend right now, but 2 years before it was a totally different mentality, and that mentality was induced also by the investors, because they were very bullish about the markets and so on. So but being entrepreneur means adaptability and be bold and find solutions for whatever. The vision is not necessarily always seeing the obstacles, all the obstacles, but you have to adapt on the spot.
I will also get back to all of you with this question, because I'm curious about every one of you's opinion on how things should change and how they have changed. Now I want to jump to Hunch, because it's Seedblink related. How was your experience to raise money from Seedblink, from Romanian investors, small investors? How is Hunch now? I have a hunch I will have a successful exit for my 2,500 euros.
I think your hunch is correct. By and large, the experience fundraising in Romania was a pleasant one, particularly with Seedblink and Catalyst. The entire process was very smooth, and the people were great in supporting the entire process. So I would definitely encourage anybody here who's thinking about that route to explore both of those avenues.
Okay, so Hunch is doing very well. You're not affected by...
We could always do better.
Of course.
But Yeah, I think from our perspective, we're let's say doing good things.
Maybe you say in 2 words what Hunch is doing, so people who don't know about Hunch.
Yeah, sure. We Hunch is a company, is a SaaS company, technology company that helps e-commerces, large brands that spend a ton of advertising dollars on Facebook, Instagram, Snap, and help them sort of acquire and grow their business online, through the acquisition of customers on those channels. And we do that through helping them scale production of images and videos across globally, and also distribute those images and videos across different sort of platforms, if you will.
Well, that's very good. Okay.
Yeah.
Congratulations. I hope you will rise and rise. And now let's get to Sergiu, finally, the biggest company here. You're the biggest. Well, the thing is, when you are in the press and you go with his big people, remember you as the almighty rich Fintech West. What was your last valuation when you raised the last round?
I think it was close to $200 million. Okay. 160 something million euros at the time, yeah, something of that.
So, and you're becoming unicorn soon, right?
Well, the sooner
yes,
the later things are, kind of different now. But I was listening to what is happening in different segments of the market at this moment, and what we have is basically the way I read the market, because I'm having one hat as the co-founder of Fintech West, which is more mature startup, if you want, a scale-up already. And then I'm also investing at seed level through Cleverage VC, which is this vehicle that is doing health tech, quite specialized. We have 12 investments, and I'm watching what's happening in Seedblink, where I have a small interest there as well. So what I have seen is that the seed stage has basically not been much affected, especially here, because of the abundance of capital going to seed all of a sudden. And the abundance of capital has come because a number of entities have come on the market at the same time with Seedblink. Like small funds, a number of angels that have started to invest a bit more. So there was no lack of capital for the seed. On the contrary, I think we have had in the last 2 years more money available for the seed stage than even 2 or 3 years ago. That's on the seed level. Now, what we have seen from the seed up is that only this year the Series A has started a little bit to move faster. So we see the Series A getting momentum and so on. On the other
end,
end,
better than last year?
Yes.
Okay.
Yeah, so Series A is starting to unlock. And it's unlocking for the best companies, as Andrei said, but it's not yet like fully flourishing. You see this with a large number of seed-based companies that are raising, in fact, another seed after the seed, or just a seed plus, or something like that, because Series A is still largely not available. So we have a disproportionate low ratio of seed companies progressing to Series A for this part of the world and for this period of time. Then you have the other total end of the spectrum, IPOs, large IPOs in large markets, completely locked. We hear rumors that there are some companies that are going to get their IPO at the beginning of 2024, in the first half of 2024, and that might unlock the thing. Where we are,
some examples maybe.
No, I don't really follow who is going to be listed, but there are some big names that everybody is talking about. But the issue there is that what you have with massively decreasing valuations in terms of multiples, especially for the larger companies, the Series B, C, D, whatever, the more mature stage, is that you don't have enough companies that are growing this fast in order to break from the range of, let's say, 200 mil valuation into the range of close to $1 billion valuation. And that is why all the funds that you see, the big names that can only deploy investments of 100 million and up, they're kind of stuck at this moment, and they don't make investments. They don't make investments because there aren't enough companies graduating from the kind of 200 million valuation into the kind of 1 billion valuation. And is not here, is not Europe, is everywhere, United States included. So that, I think, is the situation here. You have some unfreezing at the beginning of the spectrum, with the seed and the Series A, you have some potential signs of unfreezing at the IPO stage, and still very much a kind of clogged market in between, because companies are not progressing fast enough in their valuations, starting from multiples that were 40, 50 times revenues in 2021, sometimes even more, get into 100 million times revenues. But nowadays, everybody's like very concerned, and you're talking about a 6 to 8 times revenue, and that is also like very, very disciplined in their approach, and with a very, very strong push towards everybody in the ecosystem to converge to break even. When do you converge to break even? How do you look like under the rule of 40? This abstract construct where you add the growth rate of a company together with the EBITDA, and the arithmetic sum should exceed 40% for investable companies. So this is what is happening in the market right now. It's still quite bullish at seed. Everything else, let's see.
I'm curious. Let's analyze more this in them. How do you feel that this is affecting the market overall? What do you think are the effects of this in the next 5 years? Because it seems like there is something cooking there, and we're curious how we should look upon this.
This is coming from two angles, this cautiously optimistic, because you can see institutions, analysts, investment bankers that are of the opinion that yes, the market is unlocking. The market is unlocking with a significant amount of Series A's that have been raised in 2023, and potentially moving towards unlocking the Series B in 2024, and then some IPOs in 2024 that would unlock the Series D, E, the pre-IPO stages at like again 12 months gap after the unlocking of the IPO. However, if you look at what has happened and how the market has absorbed the news of high interest, and how high interest has been used in assessing, everything is discounted cash flow to some extent in valuations, right? So how that has been reflected in current valuation for companies, you realize that there is a big chance that the tech market is still overvalued. And I have heard this opinion. I'm trying to keep myself updated. So I'm trying to get every year to some executive course from one of the big schools to meet some big guys that talk about smart things. So I went to Harvard, and there was this guy there that was an active VC and an economist, and his opinion was that there is a big chance that we have not seen the bottom, and another correction in the public markets, should it happen, triggered by whatever geopolitical event, and we had plenty of, triggered by whatever geopolitical event might happen in 2024, this would continue to freeze the markets for another 12 months or something like that. Freezing the markets for another 12 months would actually come with a massive devaluation for everybody around. So his advice was, if you can raise any money today, don't postpone it. Raise now. So in between that, I think there is a space for us to be cautiously optimistic. I think the market is growing back into, let's say realistic liquidity and realistic multiples, with a much more focus on the fundamentals. Unit economics. Are you making money? When are you going to make money? And all that. There is this old thing with revenue is vanity, profit is sanity, cash is reality. And I was thinking, what's valuation in here? Is some sort of abstract thing that has nothing to do with any of those, and it's even less than what revenue is, because at the end of the day, is an abstract multiple of the revenue. So I think the market has moved away from looking at companies from that point of view. I think the market is looking more and more in a more traditional way at businesses. Hey, what is the real operational profit potential of this company in 5 years from now? And taking it from there.
Which do you personally think it's the, let's say, normal, or then will be the new normal? Because we had some very high multipliers and cheap money like 3 years ago, and now everybody is more like, oh, let's wait and see. After this, how will be the new normal? Because I think everybody has this question, even people who want to raise money, people who want to invest money, and even people who look at the stock exchange. We all, how will it be? What will be for example, I had investments in software companies like Asana and Cloudflare that are 80% down. I think UiPath was even worth. Fortunately, I didn't invest there. But I'm curious, how do you think it will be this new normal in valuations? And because valuations, as you said, is like something almost metaphysically, but it's a number that is important when you buy something.
Okay, you look at the current market for public companies, public tech companies, and you see that multiples are around 6 to 8. I'm not talking about the giants. I'm not talking about Apple and the likes. I'm looking, normal SaaS companies. So you have a 6 to 8 times valuation that is more or less on the average, and that's for money making, for profitable companies. And you have multiples that are going down to as low as 3 to 4 times for companies that are still losing money. And if I'm taking that as an anchor, if the market stabilizes there, then there is still room for the multiples to go down. My personal estimate is that realistic multiples in the area are in that space of high single digit, and the market dynamics should, the best multiples to compare with would be 2018, which I think is the last year when we had absolutely no influence of the bubble that grew up until 2021, and that's a good anchor. But we have to be aware of the fact that in 2018 the cost of money was still nil. So
will we have that again anytime soon?
Nowadays we have a higher cost of money, and we still have lots of dry powder because all the funds have been raising money, and they are to some extent, as I said, not able to deploy according to the promise that they made initially. I'm talking about the big funds. So at the same time, with a higher cost of money, you see that the larger LPs behind the big pension funds in the States and so on, they have other ways of placing their money with significant interest and fixed income products, no risk. So it doesn't make sense for them to allocate such a large proportion of their capital into speculative VC-like investments as they were forced to at a time of zero inflation, zero cost of money. So I'm looking at the fact that if it takes more time and the market stabilizes in the traditional 3-4% cost of money, 4-5%, 3-4-5% inflation, which may be one of the scenarios, we still don't have that priced into the current markets, because the current markets are still kind of converging towards the 2018 multiples at a time when the cost of money was lower. So and we have not seen the full cycle of funds going one full cycle into investing their things into startups and then raising the next funds from in the new paradigm from their LPs, from the large funds of funds and the pension funds in the States. So it's very interesting to watch. Amazingly interesting.
That's why we are talking about this.
What kind of practical thing we can get out of it in order to really make money or something.
How and I end this with you, and I'll get back like maybe tomorrow to you because we had a lot of time on the stage. From leaving aside investors and startups, do you think it's better for overall productivity and society that the money is not that cheap anymore, or you think it's a bad thing?
I'm taking a philosophical approach, and I'm saying, hey, if money didn't have any cost, this would be then, it makes no difference for me if I have this $1 million today or I have it in 10 years from now. And that's the approach of the immortals. So I think the market has accepted that we have not yet solved for mortality, and longevity and whatever is still has a very long way to run in order to get to some extent. And I think it's more rational to consider that, individuals and companies die, therefore there is a massive difference between having that million now and having it in 10 years. And I think that is the reality of time value of money that you have to absorb in the markets and deal with it. And everything else is a speculation about us being totally insensitive to the passing of time. And I don't believe that is rational unless we have figured it out, and at least companies, if not individuals, are becoming more immortal.
That's a very good approach. Andrei, what do you think about this? Because you're getting back to the finance guy.
About the cost of money, it's Sergiu put it very philosophically. But
so put it more practically.
No, but I'm totally agreeing with what he said. I'm trying to put it in the context of the startups and how they are using their cash. And I'm coming back to the same concept. If you can raise today, and Sergiu also mentioned it, it's much better than postpone it and expect for a different valuation, maybe wishful thinking valuation. Then the approach is much safer to get the cash today, even with a down round, because the startups, again, and or the companies in general, putting my shoes in my former shoes as a banker, the companies that were failing, the mature ones that were lending to, were not because of the profitability or the turnover, but because of the cash management. It's the same with the startups. So cash, again, reality is king. You have to manage your company and the cash flow in such a way that you can develop your product and your company on the long run. And at some point, your product market fit will be right, and you'll generate more turnover and you'll have more clients. But then focus on how you deal with the current environment and with the cash management.
Okay, thank you. So after I have a quick question for Mihai, and then we'll talk about teams and, of course, artificial intelligence, because if you don't talk these days about AI, it means you're not doing your homework. Mihai, we're all very curious, honestly. How is to be an underdog in an industry with a huge giant? What are you doing well? You're not just surviving here, you're thriving, you raised money, you've been here 18 years. There are lots of people who are in your position and want to know what you do well, how you do things, what's good at EvoMag as a business and this current environment, because everybody talks about a huge competitor that you and so many other small ones have.
Thank you very much. First of all, I'm very, very not happy, but I'm glad that we are in this position, because what we see is that in the next years the gap will be bigger, and then we try to build a second player, let's say, or to grow faster, because our ceiling is very high, and that means we have a lot of room to grow as a business. But if I remember, my focus always was to grow the business. I don't I look on the competition, I have to know everything from the market, what the market does, where I can grow, what is the strategy of my competitor, mostly of the biggest one in the market. And but the focus in our last 3 to 4 years was like structure and culture. And I think, I was fortunate enough to grow the business until this level, but now how can I grow the business without the decision to take all the decisions, or to be involved in any decision on the business? And 3-4 years ago, we implemented another management system in the company, or a management system, professional management system in the company, and we try to put in the hand of every manager, because 50%.
How big is the team?
90%, 85-90%. And 50% of my time now is focused to grow the management, middle management, board members together. Everybody took decision, not as in the past. I'm the guy that knows everything, let's do like this. And okay, it was hard for a lot of persons that are in the company to say, okay, but you know, maybe it's not like this. I went to schools with a lot. I made an MBA on Maastricht School of Management, the last name. It's very important when you don't know what to do, go to school, try to convince some good professional to come in the company. And it's not easy. And what I saw 3-4 years ago is like, if I don't grow the business, I will not be able to take some good talents in the company. And now I don't have another investor or my focus to grow the business. I have another venture to grow the business because I need to have a better team. And this is 50% is on the manager, 50% is on my time is to grow the business. We always focus on growing the business, not what others said, what others do, how to gain small gain. No, let's have a strategy on long term. This is I didn't plan to have 18 years, but it's a very beautiful story.
Anyways, congratulations, and keep up the resilience, because you really are resilient. And
thank you.
let's talk about the story of Hunch. Please tell us the story of Hunch, and telling us what you did well in terms of hiring people and building the team. Because you started, for example, like this. We started this many people, we have this much funding, and then we grew. And how did you attract the most important people? I assume you have important people, because this is a thing that startups do. There are a few founders do some things well, they get some funding, and then they need to hire really good people, and I hear a lot of them complaining that they cannot do this. Actually, I think it's still easier to raise money than to find really top talent. So 100%. Did you have success in this? And tell us the story from the 0-1, what you did well.
I 100% agree with you that it's that cash is there, but I think the talent, it's harder to find, and particularly filling those roles that are super important to make a difference in the company. And we grew organically from 6 people to 10 people to 12 people, so it was a very slow ride.
How many are you now?
We're 57, okay. 58, yeah. And then we had a little bit of optimizations in the summer to the point of sort of looking at the market. I think to make that point where where cash is tight, and have to be sort of very frugal and thinking of less cash makes you be more creative, right? You can't solve by just hiring more people. And so that goes to the point of, if there's no cash, then you have to really be thinking about what you should be investing in and who you should be hiring. I think in our perspective, we didn't do a massive sort of hiring. We organically a little bit grew, but I think we still have some roles to fill that are super important for us to grow for the next stage. In this particular stage, we filled those roles. Well, there was VP engineering, on the engineering side, on the marketing side.
How did you pitch them? How do you convince them? Come with us.
Yeah, I think I would say that was that's I think a side product of having a down market. Because when you have a down market, in terms of let's say outsourcing companies having less projects, essentially what that happens, maybe those companies have less funds to invest in new projects, and thereby outsourcing companies might not have as many projects, and thereby they have to reconsider, or maybe there is a little bit of tension within those companies. So we were fortunate enough to pitch to a VP of engineering that grew a company from 0 to 200. That was in the fintech space. And we pitched basically, what a startup is all about. Essentially having that vision and mission and changing something and bridging the gap between this part of the world and sort of the Western world. So it was relatively easy. It wasn't as hard. So to that point, I think there is a larger talent pool now talent pool now than it was maybe a couple of years ago. People that are looking to do things that are interesting, you know. So, but for us, you know, growing, I don't think growth at all costs means growing teams at all costs. I think, you know, if you know, sprinkle on top a little bit of AI, and if you sort of extrapolate that over the next few years, you know, I'll play devil's advocate to your point, and you know, having more cash is, you know, better. I think being more frugal and being, you know, more innovative or creative with today's technologies, you might do more with less. You know,
you're using artificial intelligence. Let's have a quick
absolutely.
round about this. Everybody talks about this, but how do you actually do it? What do you really do?
I'll tell you two sides to the story. One, we of course are a company that's sort of pushing the boundaries of artificial intelligence in the space that we operate in between creative. So, you know, creative.
It's something built by yourself, or you're using your own top?
No, we all build our own technologies. You know, and these are essentially, if you think of, you know, creative AI, so, you know, like the Midjourneys of the world, you're, you know, producing lots of different creatives, you know, so we're in that space, and we can see the fact that, you know, creative production and the creative generation or scale of that will, at some point in the next few years, all of us will be able to create a video fairly easily from just our thoughts, if you think of it, right? So that essentially means that, you know, the production or the creative itself, you know, will be commoditized to a certain extent. It won't be as expensive to make. Which,
how does this affect you?
So it actually affects us positively, because from day one we not only had a vision of creating, you know, an AI-driven sort of creative production or manufacturing unit, but also a distribution unit. So we actually just recently learned this because other, you know, companies came to us that were farther down the road who wanted to acquire, you know, this piece of technology that we have, which is like, now that you have thousands of videos, you know, that easily can be created, well, what do you do with those videos now, right? Now you've just sort of taken that problem and given it to the other people that have to do something with those videos. So we, you know, built a distribution system that, you know, sends that creative out to the right person, to the right channel, and so forth. So it's the mix of old and new. Something that I thought was perhaps, you know, just the piping in terms of the distribution to channels. I thought that was a non-sexy part of the business. Actually ends up being super important, because it actually leverages your position to take that creative and make it work. So for us, that's an external view of how we're using or developing AI to further sort of, you know, help the creatives and the media people get more sleep. But internally, we're definitely bullish on using AI, and that's in terms of both content creation, its briefing, its summarizations. I'm speaking from non-engineering perspective. I don't know what the engineering guys are doing in terms of AI, but from a sales and marketing perspective and CS perspective, all of our teams utilize AI to some degree.
Even in management decisions?
Not yet. I would say, well, actually, you know, I would say you might be surprised in terms of summarization of key sort of reports, certain things like that, but not in terms of management decisions. We haven't outsourced that yet. Not yet.
Okay, and what's next for Hunch?
So we are.
How will you be in the next 3 years? What are your main targets?
So I mean, you know, with every, you know, company, it's like you know, Sever to TS or TTS says, you build different sort of cylinders to the engine, right? So we started with an inbound engine, and we started to grow a little bit of outbound. But right now we see, and this is a point for other startups out there, you know, the best way to grow at this stage in this market today is through partnerships. Is basically sort of leveraging the brand or existing relationships from existing you know, customers or existing partners to get into that. So for us, that's naturally Meta, Snap, TikTok. And so we're heavily invested in building those relationships with Snap, you know, Meta and TikTok to sort of, you know, unlock a new cylinder of growth for us, which is essentially building out, you know, they have maybe 500 mid-market brands that they can introduce you to and so forth. Today, just to the point in terms of go-to-market for those startups that are, you know, at the stage of, you know, early, outbound or that's part is really sort of slowing down for a lot of companies for various reasons. From a technical perspective or tactical perspective, you know, Google and everybody else is limiting the amount of emails that you can send unsolicited or like cold. So that's being really hampered down. So startups today have to be super creative in finding their market and actually going after the market, which for us, that's partnerships. For somebody else, it might be something else.
So you're a SaaS that is becoming successful. Tell us, what is your main number one KPI and other two that are super important for your companies? When you say Hunch and it's becoming successful, what is that number one KPI?
So the number one KPI, obviously, you know, is growth, you know, efficient growth, I would say, externally looking. I think internally looking is, you know, making sure that we are aligned as a company. As you grow, there's so many things that happen, so many things that go wrong, and I'm sure all of us here on stage could probably write a book about all the bad decisions that we've made, or all the sort of mistakes that happen, and the learnings from that, whether it's hiring, right, or whether it's go to market, or whether it's product, whatever. So our number one goal at Hunch today is essentially aligning the company towards growth, in terms of revenue, but in that process, figuring out a way that all of the people that are at Hunch are making an impact towards that North Star. So figuring out a way for them to align with that growth, so it doesn't just come and somebody else is not connected to it.
Okay, thank you. Let's get back to Sergiu. We have to hurry. It's like in Moromeții, timp avea răbdare cu oamenii, now we are in a hurry out of a sudden, so yeah, life is not fair. Tell us very shortly, Sergiu, how do you use artificial intelligence, and also about how you hire talent, and maybe if you can give us some details about your current situation with the layoffs that people are talking in the market. So.
Okay. Let me start with the last one, with the elephant in the room. Well, the company is doing great. The company has increased the growth compared to last year by, I don't know, 40%, something like that. And it has reduced burn to half of what last year was. It has reduced burn this year. Second half is half of the burn of the first half. But this whole process of transformation needs to be accelerated to be the company that the markets want. I was telling you earlier, the markets expect companies of our size to break even, and we have to do that. And we have to do that, and while keeping a solid growth in the markets that we address. And that obviously comes with the imperative of adjusting the resources in a way that is best fit in order to achieve that. And it's choosing certain markets, choosing certain product verticals, and so on. So that is the thing. I think, in a funny way, that the access to talent is getting easier as you grow the company, because you build a name for yourself.
It's the brand.
And there is you build a brand. And the thing is, people want to work for the big brands because it looks good on their CV. And everybody would kind of feel that if they are like a very senior professional, having worked for big brands and so on, they would feel it, okay, it's a risky move. What if this doesn't become as big as they promise? So a big number of them would never try to work for a startup. And an even larger number would never work for a very early stage startup. And in our case, we were lucky that we were known as entrepreneurs in Romania, so people joined Fintech OS early in the game just because they trusted us as managers, as humans from the past, not necessarily because there was necessarily a trust at that time in the brand. So that is one thing. Coming back to the subject of the year, which is the AI.
Short, Sergiu, because
with Gen AI, you can build anything, because it's about translating something that is now able to generate stories and descriptions and structure descriptions and code into building anything else that can be structured. And that is a massive gain in productivity. At the same time, we have for several years an advance of predictive AI. And in a way that if you have something and you test it in the market, then obviously you can use machine learning, you can use predictive AI in order to improve the outcome of that and to do massive A/B testing in a way that allows you to get the best outcome. Now, if you put together the two things, and this is actually what I think is going to happen in the years to come, if you put together the ability of having let's say hundreds of artificial workers that would generate prototypes for you, would send them into the market and come back and select with predictive AI the best solutions possible, I think we are about to unlock something that is solving for probably the best possible outcome for the consumers in a number of markets that we are not yet able to fully comprehend. But it's creating massive opportunities for everybody to step in with their own startups in order to take advantage of that.
Okay. Thank you. Andrei, quick answer to this AI. Is Seedblink doing AI internally? You're using it?
We have started to using it as a tool of education for equity in general, because our ecosystem is related to that general concept of building and structuring equity. Now we are trying to figure out how we can use AI in the relation with my portfolio technology that the investors have with us, as well as in how to build theses, investment theses, and how to link it with any other open sources. But and also we figured out that we possess a lot of data as a company, and how to link the AI with data building and so on. Well, it's still very early. I'm not a tech guy, but it's for sure one of the priorities for each company that should use the technology further on at the next level.
Okay, thank you. Mihai, give us a final thought on the e-commerce market, and what advices would you give?
I will talk about what, because in our focus was always, because we are this type of the business, operational excellence. Because this is the type of business, how to deliver more, much faster, much cheaper, with not a lot of team. And now we use AI, okay, a small part of ChatGPT for documentation of the product. And it's very simple, because, okay, you from the March to now, you always heard about AI there, okay, show me something, because I want tomorrow to use it. And we use it for some products that are in our stock, and it's very easy because it's e-commerce. Everything is very clear and easy to see. If we make a documentation for 2,000 products, 3,000, 5,000, after 30 days, the bounce rate, that means the time that the client spend on that page, decrease from 60% to 40%. That means the client spend more time on the product. That means grow the conversion rate. This is one. Another pilot that we have is that let's have procedures. It's very easy, but a company has a lot of procedure for everything to be very good. And we try to implement, okay, you don't know something, speak with an GPT, and he will deliver very fast the information. To spend much less time on small things that don't bring value. This is the 2-3 pilots. And another that we tested last days is to put, I don't know why, it's a mystery now, and I don't have an answer, why others e-commerce, big e-commerce, don't implement this kind of discussion with the client. Okay, I want a TV of 2,000 RON, what I will order or something, and it's interesting that we try to develop something like this in EvoMag.ro. For the e-commerce market, it's a market that will start to grow again. This year and the last year was a stagnant growth, let's say, because I heard something interesting, negative growth. What is negative growth? Is it growth or not? But I'm sure that the next two negative profit, I'm sure that the next year will grow, because if we look on UK, we have 40–50% of the market, it's in online, and another 40–50% of the market, it's in offline. Now we have close to 7–8%.
So it's a lot of room to grow.
Exactly, a lot.
I like to tell this story, and we end here. I was in a hypermarket, wanted to buy stuff, and I was like, geez, I cannot do this. So I opened the app, and I ordered online from the app inside the big market, and I went home. I said, life is too short for this. So yeah, things are definitely changing.
And they develop, they unlock because easy boxes or something. It's common sense that this will be growing.
Unfortunately, we have to clear the dance floor because another party is coming here. A lot of value from these guys, so ask them questions. We don't have time for Q&A. Just run after them and ask them everything because they're all super wise and super cool. Thank you all guys for such great advices. Best wishes everybody. Thank you. Bye bye.